All right, so here we go, lesson number 3, and today we're going to talk about highs and lows, how to trade at highs and how to trade at lows with a price action, since the market in today's situation is actually giving us highs and lows. So we're going to go ahead and go through, of course, the book Price Action for All. You can get it from my website, also Amazon Kindle version as well. Okay, so trading at highs and trading at lows, it could possibly means that the market is about to give a sort of reversal situation, that it can turn around based on the price action information. Okay, so I'm just going to go towards that part of the book, and you can, of course, read about the price map, which is the first step to understand price action, how you set up the most important levels in the currency market or commodities. Remember that, of course, you can use price action in FX, commodities, and some of the instruments that have history and the price is not manipulated. So, for example, you don't want to be using price action for cryptocurrency. That is not an instrument that I recommend to use price action. Okay, so we talk about equilibrium price, we talk about the origins of price action. And if we go towards what is the highs and the lows, let's see, for example, price identification here. And I see many times that when you trade with, for example, charts, the chart might give you the absolutely wrong information when it comes to lows and highs. So, for example, the euro dollar at this point, if you've seen the price activity, it's been dropping for the last month and so. And of course, every time it goes down, it will give you a new low. It could be a new monthly low, a new 2-month low, or a new year low. And many traders get stuck trading and trying to buy based on the overbought situation that it presents, or based on the market giving you that sort of buy possible pressure, but not enough to actually jump in and buy. So this last, I'm going to say 3 weeks, I've been, of course, trading with some people asking why I keep shorting the euro, why I keep shorting the pound, and I said, we're trading at lows. And if the price keeps dropping and giving you new lows, all you got to do, even if the buyer tries to jump in, all you got to do is actually to short even more. And that's been the example for euro dollar, the pound dollar as well. And also for gold, the gold, the same situation. I mean, you've seen the buyers, because they, of course, they try to jump in the markets, but they eventually get stop losses, because it keeps dropping even more. Okay, so I'm going to show you really quick. Let's give an example here. You won't see as many charts in this book. We're going to talk about also this very important concept of open interest. Because I don't want to get stuck on charts. You had to be able to trade beyond what you actually see with price. Here, of course, I give you a Bitcoin situation when the price was actually trying to give us a measure of the price activity. But as today, the cryptocurrency is based on only 3 people. I'm going to say 3 group of people that are actually changing the prices every time. So it's absolutely manipulation. You don't want to use price action with products that are being manipulated. Let's see if I can go to euro dollar. So in the book, I'll give you also the transition levels where you don't want to get stuck. Transition levels that you don't want to be even trying to work on those levels. I call them the transition prices. Transition prices are those levels that you don't want to be trading there. Okay, so in the meantime, what I'm looking for And the book, let me give you the example in the open market. So this is when you trade on the lows. For example, this is euro dollar. I'm gonna go for 1 hour time frame. And if you see every single week, the market was giving new lows. Okay, so what I'm trying to my traders when we trade on live trading sessions to be focused is that you have to avoid the buyer. You want to use the buyer to short even more. There is no fundamentals that are actually pushing the euro or pushing the pound for the buyer. There's no context for us to short the dollar and to buy the euro and buy the pound. So that being said, every time we saw the last month or so, every time we saw these sort of buyers, I keep telling them, we're going to focus on the seller. Okay, so we said, okay, we're going to see the 106 coming soon, and I'm going to get ready to short below 106. So we short below 106. And then I know when the market's going to try to buy again, because you got to understand the psychological prices. What are the psychological prices in all these areas? Well, we had the 105.30, we had the 105.50, we had the 105, we had the 104.90. Those are the psychological prices that the euro or dollar presents. So I know that I have to wait for these buyers before I jump in and buy again. And that's exactly what happened. At the 105.50, some buyers came in. 105.30, we got some buyers. You can see in 1 hour, you see a bearish straight line. But if you go to 15 minutes, you see some jump of buy prices there. We shorted again. Also buyers at the 105, we shorted again. And finally, we got buyers at the 104.90, and I respected those. I said, no short, no more. So we stopped shorting at this level. And today, finally, we got the first buy situation with the euro dollar, which is not definite because we have to wait that the market tomorrow and the European opening hours, they hold their buys with the euro. So what will be the projection here? A projection means that if the market is above the 105.50 until tomorrow, we're going to have more buyers up to 105.70 and the 106 again. The most important condition for me to see that the euro is going to keep pushing towards buyers tomorrow is only if it's above the 105.50 the entire session until the opening of euro tomorrow. And that's the scenario I'm going to be managing. I'm going to keep trying to wait on the buyers. I'm going to start buying at the 105.70 up to 105.80. Above it, I'm going to keep buying up to 105.80 and the 106. What if tomorrow Europe opened for sellers? But what I'm going to do, I'm going to short below the 105.50. That's it. All the way down to 105.30. I respect these buyers, and below it, I'm going to short again, down to 105.20. So that way, you know how to trade on the lows and how you trade on the highs, because what it was giving you highs, actually, there's not that many instruments giving you highs, honestly. It's everything just going straight down. Index, commodities, many other instruments, they're just all out. But the euro, they're actually holding as we speak. But don't trust the first buyers that you see, because again, we are below the 110 on euro. So you are in sell situation here. You are in sell pressure situation. You're not in buy pressure here. You are in sellers. So before you jump to the conclusion that now's the moment to buy the euro, I'm going to wait until possibly the trade session of tomorrow to see if Europe holds the euro about 105.50. If that's the case, then I'm probably going to buy and keep having buy strategies tomorrow for euro. the pound dollar, same situation. We keep shorting on the pound dollar for the last month or so. And in my book, I keep explaining why am I holding the sales? Because I'm also just getting paid for the swaps. But you cannot hold the buys because the buy are not paying you swap. You're paying swaps. So you don't want to be holding buys when it comes to the point that we can start buying on the pound. So what happens here on the pound, what I said to my students, to my traders, is that I'm going to wait till tomorrow to see. Today we are at Thursday, 28. What I'm going to do, I'm going to wait until tomorrow to see if the buyers on the pound are holding about 122. About 122, I'm gonna for sure going to buy the pound dollar up to 122.20, about 122.20, 22.30, about 22.30, 22.50. So they know this information already because I explained it in my live trading session today to all my students. We're going to wait for tomorrow to see if this is real, to see if they're actually holding the pound. What if it's not? What I'm going to do if it's not, then I'm going to start shorting below 21.80, all the way down to 21.70, scalping down 21.50. That's it. Okay, so today's lesson is basically when you have those situations that the market is kind of proposing to turn around, don't jump to the first conclusion that now is the moment. Okay, again, make sure that you understand what market levels you are getting involved. Okay, so you know you're under sell pressure, yes. Sell market area, like I explained in my book, yes. But don't jump too quickly. At least 2 more trading sessions before I can assume that in fact the market is buying the pound and buying the euro. Again on gold. With gold situation, we short today. We short many times. I'll show you the explanations of my chat, but you see all the names of my traders and students and stuff there. So I cannot really show you the instructions, but this is why I said, you know, we are gold below 1900. We just short big time. And when you understand the price activity, you know that many traders are really going to try to buy on gold. And now you've seen this. All these blue guys right here, all of them, they were really trying to push gold big time, trying to buy gold big time. Not successful whatsoever. So once I was actually below 1900, I said, get ready. We're going to go down to 1850. So today, that was the last short we did with gold. And then after that price, the market tried to buy a little bit, but honestly, not enough to change the strategy with gold. Where or when am I going to change the strategy? I have to see. I have to wait. I don't know what's going to happen here, so I'm not going to buy. Of course not. I'm not going to short because the shorts are completed. The price activity is done. The only way I'm going to short gold is below 1850. That's it. All the way down to 1830 and 1820. If not, I have to respect the buyers today down this price. Okay, what if tomorrow opens for buyers? Possibly, I'm going to consider the buyers only above 1970, possibly, but it's not 100% sure. Again, you can try this strategy with any instrument you like. This is dollar yen, for example. Again, just buyers. Of course, you see highs with dollar yen. I wouldn't jump in and buy dollar yen at this point. What I'm going to do, I'm going to wait on the buyer. Yes, possibly above 148, 149.50 towards the 149.70. I'm going to start buying dollar yen. But no now, no here, because these are very important highs. And honestly, the price is too high to jump and scalp on dollar yen. So possibly I'm going to wait on the seller so I can scalp it, but below these prices. Not as fast as you may think you can jump on the conclusion that you can just buy dollar yen because it's dollar yen. Sometimes the market takes profits also. And those levels are kind of the way 149 before I jump in. Okay, so one more time, price action, price activity. The only goal here is for you to kind of get free over charts, free over any conclusion that is not helping you. Because again, you want to be one step ahead of the charts and all the algorithms and all the indicators. Price activity will always keep you on top of everything. Also the information. I'm going to talk about that also in the next few lessons, how you understand the fundamentals, how you trade information, how you go with price action and fundamentals and news. There's also huge deal when it comes to price activity. All right, guys, I'll leave this lesson here and I'll see you on the next lesson. Of course, my name is Karina Fabi. You can contact me here on the comments on this video. If any question, if any instrument you want me to see in price activity, I'm happy to help. I'll see you on the next one. Bye-bye.